Perfect. So we've kind of touched on a lot of the basics of where and how to file and some of the reasoning behind it, but we haven't really got much into who is supposed to get the 1099. And we talked about a general rule earlier at the very beginning of the course. If you're in a trade or business and you're paying somebody more than $600 a year and they're not a corporation, they should get a 1099. But like anything, there are plenty of exceptions. That just seems to be a common theme in anything dealing with the IRS. So there are some exceptions to that dollar amount and to the non-corporation rule. So we're going to cover those exceptions right now. In general, payments to corporations are exempt from 1099 reporting. So that's a nice thing, that if they are a corporation, we don't have to give them a 1099. But there are exceptions to that, meaning it doesn't matter if they're a corporation, they're supposed to get a 1099. So who are these exceptions? Lawyers. Apparently they're worried that lawyers will report their income properly, so they don't care if that is a corporation. They want to go ahead and make sure it's reported. So if it's box 7, so that's that non-employee compensation, or box 14, we'll talk a little bit more about box 14 in part 2, they still have to get one if they are a corporation. Medical and healthcare payments, that's box 6 of the 1099 miscellaneous. Again, doesn't matter if they are a corporation, they are required to get a 1099. So this is where that exception doesn't work. If it's a broker and barter transaction or a cancellation of debt income, that's a 1099-C. Or if it is federal withholding or foreign taxes. Now here, because let's say that you have a case where you're taking out federal taxes and paying it in, or paying in foreign taxes, of course they want to know about it because they wouldn't be able to match up how much was paid in if you weren't reporting it. So here's where it certainly makes sense why they have an exception to that. It doesn't matter if this is a corporation, they're going to want to know how much was paid in on their behalf in federal withholding or foreign taxes. Fish purchases is another where, again, corporation doesn't matter if you are that status. And again, if you're wanting a lot more of these really great details on this, definitely part 2 is where we're going to cover all those. But we're just talking about exceptions really at this moment. Merchant card and third-party payments, that's going to show up on a form called a 1099-K. All companies, regardless of corporation status or not. Federal withholding or foreign taxes, again, we had mentioned that just a little bit ago. Substitute payments in lieu of dividends and interest. If you happen to have those type of payments, that's box 8 of the 1099 miscellaneous. Acquisition and abandonment of secured property. Credits or interest on qualified tax credit bonds. So here it gets a little bit more out into the weeds. You can say it may not be that you see these every day. That's going to be something called a 1097 BTC, or it's also going to be a 1099 interest, that those can show up. It could be that you have federal executive agency payments, and those are a 1099 miscellaneous. All these are exceptions to the corporate rule. So these are some things just to keep on your radar, is even though we say, yeah, if it's a corporation, you don't need one, there are an occasion, depending on what the payment is for, that you have to ignore that rule and issue a 1099 anyway. We have to look at, there are some dollar exceptions as well. So of the dollar exceptions, that means where we say, well, we said only if it's more than $600, right? Well, these are particular 1099s that if it's $10 a year, they're required to get a 1099. So it's a little lower threshold. So if we look at anybody who gets interest, 1099 INT, now if you're in the tax preparation, you may, if you've ever wondered, why do some banks give out 1099s and some don't? And it has to do with how much interest they've earned. If it's more than $10, they're supposed to give out a 1099 INT. If it's less than, they don't have to. If they get dividends, the same thing, except it's a 1099 DIV form. Anything more than $10 a year needs a 1099. Retirement income payments, those 1099-R forms, again, anything more than $10. A distribution from a cooperative, 1099 PATRs. Royalties, those show up in box 2 of that 1099 miscellaneous, and original issue discount. All these are ones that they hold a lower threshold. So in a way we can say that's where our general rule of $600 doesn't apply, because these guys have a much lower threshold that they're interested in finding out, if they have any of these things apply, they want the 1099 issued. Here's even an exception that goes beyond that, and they say, well, wait a second. Definitely not if it's over 600, and we don't even care if it's over 10. If there's any dollar whatsoever, you are to issue a 1099 in these particular cases. So if they have an abandonment of property, so any dollar amount means literally if it's $1, they're supposed to be 1099 issued. Broker and barter transactions, 1099B forms, any dollar amount. Healthcare credit advance payments, the 1099H forms. Long-term care, that's your 1099 LTCs. 529 plans that come out on a 1099Q. If they have any HSAs or MSAs, those are issued on a 1099 SA form. Fish purchases. So again, we see this kind of an interesting recurring theme in this category. Those are reported in box 7. That's normally our non-employee compensation box of the 1099 miscellaneous. But if they are for fish purchase, it is not that we can wait for that $600 threshold, which normally is in effect for that non-employee compensation box 7. If it's for, and as I said, it sometimes does matter what you're paying it for. If it's for a fish purchase, well, any dollar amount, and it doesn't matter if you're a corporation, has to be reported. ABLE accounts, this is kind of a newer one that came about, I think, in the 2017 year, or maybe just pretty recently. Those are reported on a 1099-QA. They don't care, again, what dollar amount. They should be reportable. And then 2 brand new ones that have been issued now for 2018. These 2 brand new forms they have a no dollar exception as well. So any amount that happens to fall within these 2 categories is reportable. So these 2 new forms are a 1099-LS, which is for a reportable life insurance sale, and a 1099-SB, which is the seller's investment in life insurance. So they may be a little bit obscure forms. The thing is to know that when we look at what we call the general rules, well, there's dollar exceptions and there's corporate exceptions that apply. So it is good to just become acquainted with your particular 1099 form that you'll need to do the reporting on and make sure that you're truly reporting everybody that is supposed to be reported on there. So our general rule, in reality, the $600 rule we think about really only applies to a very small portion of all those myriad of 1099s. It applies to usually the 1099-C or cancellation of debt. It applies to, we can say, most of the 1099 miscellaneous. There are a lot of those boxes that have their own exceptions, of course, but when we think about the most commonly used box of the 1099 miscellaneous, that's the 1099 miscellaneous box 7, that non-employee compensation. Yeah, the $600 rule works. As long as it's not for a fish purchase, then yeah, well, that's a great thing to think of, that $600 rule, because that's our most common reporting box, or the most common reporting form. 1099-S, so that's certain real estate transactions. You'll often see these in practice if somebody, let's say, sells a home or sells a piece of land, they get that 1099-S. It does carry the general rule, the $600 threshold. So we say, well, there's so many exceptions. Why do we think of it as a general rule? And it's just because the most common, like I said, the most common form, the most common box, it does apply. So that's why it just becomes in practice, in a lot of our industry, what we think is the rule, and what we'll even tell clients, yeah, if it's over $600, because most of our clients aren't really doing a lot of these other reporting forms or boxes. So it does hold true that if you're not a corporation and it's over $600, well, yeah, then you have to report. But as you can see, because of all the exceptions, it is good to become a little more acquainted with and become comfortable and familiar with what ones you really are doing there. What about employees and 1099 forms? Here's something that I see occasionally, and it's unfortunate that it's just comes from a lack of understanding, but it's not ever appropriate to issue a 1099 form to an employee for amounts paid outside of the course of their ordinary work. So they're not really supposed to get a 1099 if they're already getting a W-2. And here it is that it is a problem, because if they were in any sort of an examination, that employee social is showing up on a W-2 and on a 1099, that can be problematic. So what's ending up happening often is those W-2s are being issued for wages, and that business maybe doesn't understand that they do this bonus over here, or a gift, or per diem, or mileage, for example, employee auto allowance, mileage reimbursement, or a reimbursement for some sort of a purchase made by the employee. Those definitely should not be thrown over on a 1099 just because they don't know what they're supposed to do for it. If they pay a commission in addition to the salary or wages, that's kind of like how bonus works, or a payment made in another form other than cash, like a gift card. Those are, and there's actually very specific language, which I know is the topic of its own webinar, but these are all supposed to be reported on a W-2. They are not to be just generated as a 1099 because they don't know what to do with it. They all are supposed to be in a W-2 and handled through the proper W-2 reporting. So that can be, one of the things you look for is make sure that you're not getting that same individual a 1099 as well as a W-2. It really should be handled over in that W-2. There is a statutory exception. It's kind of like we talk about what is all these rules, and we instantly have to talk about the exceptions. And the statutory exception is a director. Now, a director could be an employee of a corporation, but anything they do in the line of work as a director, they're not supposed to actually be paid as a W-2 in that one capacity. So director fees, statutorily, meaning by law, are supposed to be reported on a 1099. So even if they are an employee, any payment for the director fees have to report it on that 1099 miscellaneous box 7. So that's one of the things to watch out for, that I instantly say you should not ever have an occasion where that W-2 employee also has a 1099. Here is one that is a legitimate one. So it's just to be prepared for that, because that's an occasion where maybe it will be reported wrong the other way and put on that W-2 when technically as any fees earned as a director should be reported on a 1099 instead. There are a few other obscure little exceptions out there. We do try to cover as many of those as we can, and we'll be covering those throughout the next parts of the course in 2 and 3. So just a lot of this to just understand about the rules and requirements of reporting. When you're out there in practice, the most common one you see is that 1099 box 7. Know that it's due January 31st to the recipient. It's due January 31st to the IRS, whether it's electronic or paper. So that's just something to kind of keep at the forefront, as well as those W-2s. They carry the same due date. And that for the most part, they have to be paid more than $600, has to be paid in a trade or business. So it's not like, let's say, a neighbor hires his neighbor to paint his garage or whatever the case may be. That's not really that it's being done in a trade or business, unless that person is in business for themselves and they're hiring that neighbor out. So it has to be done in a trade or business. Over $600, and if it's a corporation, generally you don't have to report that, 1099 miscellaneous box 7 unless, it's a fish purchase. So a lot of it, just if you want to keep these slides as a reference, that's great. You can go to the site that we gave you, my site, the taxedge365.com/canopy. There's going to be course materials there, which is the full manual that accompanies this, so that you can go through and have the details. But the bottom line, each year that you're getting ready to do 1099s, you want to be able to go through and look at the instructions and refresh yourself. Even if it is that you've done them a million times over, it's still recommended to do that, because they'll change little things. Like this year they have new addresses. You wouldn't pick up on that if you weren't at least glancing through it. So there's a lot there that you can see right from the instructions each year. So I hope this was enlightening to know, we covered a lot of the basics, the requirements. We understand, okay, yeah, I get it. I can see why they want to report. There's pretty bad rates of voluntary compliance if it's not being reported to the IRS, in a way, kind of babysitting. We understand the mindset of why, a little bit of the basics of, who should and who shouldn't get the 1099, how to file so they can be properly read as they go through that scanning system. So hopefully with all that, you have some of the basics of the nuts and bolts of it. I certainly recommend for you to go into the other parts of the course.